Welcome back to the YouTube channel. Today I got a really interesting topic, and it is why housing has not collapsed and why it probably won't collapse. Market, so to speak. So I haven't been posting a while here, unfortunately. I haven't been doing my nightly walks. I've been super busy with growing the alley from corporate account. We got some really cool stuff coming, super exciting story. And yeah, that is why I haven't been posting on this account as much as I'd wanted to, because this is a side project of mine. So today we're going to talk about why corporations are buying houses and why the housing market hasn't collapsed. And I got some real inside knowledge because I'm selling 2 of my properties, and it's really, really interesting. And I have some cool information for you guys why I believe, or I know, that the housing market isn't going to collapse. So I'm selling my Airbnb in Las Vegas, and I'm not going to give you guys details. You guys can look it up. It's somewhere in my other videos. But what's really crazy about that is we got an offer on it, and we listed it for a substantial amount, and we got an offer 17% lower than the asking price. And I'm like, how did they come up with that number? So I asked my realtor who's buying, like a little bit more information about the buyer, what they're doing. And so my realtor's really, really amazing in Las Vegas. And so she basically got some information out of it and out of them. And it's an investment company, and they're buying hundreds upon hundreds upon hundreds houses each month. They say on average, they buy 500 houses each month. And I'm like, so I had a conversation with her, and she said that these guys in the office, that company, they make offers 17% lower than the asking price, and they don't even look at the numbers. They just make an offer, and they'll see, once you accept, it's great. Once you don't, they'll move on. And they said it's a one-time type of deal. It's 70% lower than the asking price, and if you like it, we'll cash buy it because they have a bunch of investments. And if not, they'll move on. And so I was like, wow, so that's their strategy. And I said, yep, they're buying 500 houses each month. They've been waiting. They're sitting on a sideline for quite some time, and now it's the time to buy. And so what I'm looking at is, holy smokes, you're now competing with corporations. So if you want to go out, before it was the common folks. When I was buying a house, it was just me and another buyer or something like that. And now you're basically up against corporations, big investments. So when you're going to tally up against the corporation, and they're going to say, we're going to spend, we're going to do a cash deal, 21-day close, and stuff like that, all of a sudden, you're like, that's pretty interesting, because all of a sudden when you're going to have corporations that want your house, that are buying single family homes, not multi-family. They're not buying your 17, it's all right. They're not buying your 17 unit multi-family complex. No, they're going after single family homes in residential areas. So that means that prices are going to come down, maybe, because these guys are just going to say, we're going to bring the comps down a little bit with 17% less than you were actually wanting for your house. But hey, now what you can do is you can list it 17% higher, because if somebody like them bites, then you got what you wanted for, right? So that got me thinking, and I'm like, people are moving to Vegas in droves. I've seen the housing supply is not where it should be. Even though I see a bunch of construction, there's so many people moving here. There's so much demand for housing, single family homes, because it's just nice weather. Look at this. There's no sunset, like no rain, clear sunset, no bugs. So I get why people moved here. That's why I moved here. And I know in most of the country we have housing shortages, and that is one due to the fact that we have so strict regulations now, where you need an environmental scientist to come out. We need all these crazy tests done to build houses. Oh, we need an impact environmental person to come out and test the area. We need I don't know, the water company to come out to make sure that that the slope is right for when it rains on your property. We need all these crazy tests done in order for you to build a house. And then you need soils and all that, soil engineers and whatnot. And I think it's crazy when you're trying to buy a house now, when you never bought one before, and you're basically going to have to compete in this market with high interest rates, high housing prices, and low inventory. So it's not like you're the one that can go out and says, let's get a deal. Let's go and have a party and get a deal and make 4 offers. All of them are 25% below asking price, and we'll try to figure it out as we go. No, we are in a market where that is not really possible anymore. We're in a market now where you gotta have good credit, you gotta have all these things done, and people aren't selling. Like me, for instance. I would not sell my house. My house is in, I think, 2.9% or 3. Why would I sell? Where would I go? And I had that conversation with Allison also, like, hey, we're gonna end up buying 2 new properties, or 1 big one that's coming. I can't tell you when and where we're gonna do that, but we're gonna do that. And I'll take you along the journey. And it's crazy how now there's like so low inventory and people don't really have the money. And I think in August, with the student loan repayment plan gonna start, we're gonna see even more pain, because all of a sudden I know people that pay $3,000 or $4,000 a month in student loans, and that's gonna start. And that's gonna really hurt. That's gonna really hurt. So now we're looking at, you know, houses, and everybody's saying there's a crash coming because interest rates are at 7. And I'm like, no, for a housing crash to happen, that would mean people like me in the low 3s would have to sell. And I don't see us 3%ers, you know, that have in the low 2s, high 3s or something, selling anytime soon. We could turn it into a rental unit. We can do something else with it, but it's not wise to sell something that has that much value. So when I bought my first townhouse, our interest rate was 4.5, and then 2 years later, or 1.5 years later, the interest rate was 2.8 on that one, and I was like, oh, 2.8. Man, we got to refinance. And people told me then, oh, it's never going to be as cheap as this again. And they were right. As of today speaking, it is the cheapest it has ever been. So now we would have to sell our house and a bunch of other people to actually get rid of the housing inventory. So the low inventory would have to go with people like me selling, right? So now I'm looking at it like, what would that be? What would that have as effect? So if they take away the remote work, that'd be one of them. That would really substantially hurt us. But it wouldn't kill us, and it wouldn't make us really leave this area. And I know other people are not as financially or as have that many different sources of income to just focus on another source and build that up. So then we're looking at, how are we going to capitalize on this? So that's what I'm thinking. Because I'm not a big landlord, I'm not a big investor, so I'm not I'm small mom and pops type of deal. So how can you capitalize on this? The only way how you can do is you can wait, but then you're sitting on the sideline, or do what this company's doing and is asking for 17% off. So my idea is probably, if I'm gonna buy one, is to replicate that strategy and see if that's gonna fit, and just have my agent write 17% offers below what they're asking for. It's probably not the best strategy, but probably not the worst either. And if they don't want it, hey, if you have the money, you're the one that's saying which direction to take it in, right? So basically, when you're gonna have the cash, you bring to the table, you say what it's worth. And that goes for selling cars too. If you're selling a car and you don't want the price, you walk away, right? But the dealership's the one with the money, so they say, I'm gonna pay you $10,000 for your car, and you say, no, I want 12. It's your opportunity to walk away. Nobody's forcing you to. So when you get offers on your place, you'll find out what true market value is. So offering 17% lower than asking price, it's gonna come in pretty handy, that strategy, I think. Because when we're gonna do deals in the future, and I will take you along and I will tell you how the strategy goes, so like and follow for more. And I will keep you updated on our real estate journey, because I think real estate is connected to everything. Real estate is almost like stocks, because I read an article that said that the real estate, most Americans have money in their houses. They don't have a bunch of cash laying around, but they have equity in their houses. So if they're gonna sell that, then they cash it out and buy something else. And when I look at San Jose in particular, I see old boomers, elderly people that live in 4 bedrooms, 3 bathrooms, houses that actually only need a 2-bedroom house, but they don't want to leave because they have a low interest rate, their house is paid off, maybe they have a low property tax rate and all that kind of stuff. They like their neighbors and whatnot. And so there needs to be incentivized programs for people to actually come up with new ideas of how to incentivize these people to downsize. And it's hard to downsize when you know your whole street and your whole street loves you and you love all your neighbors. And yeah, what are you gonna do with that? And so unless these people and people like me sell their houses, there's not really gonna be a housing crash unless there's something that I don't know and they're gonna raise interest rates to 10, 11%. If that happens, I think we're gonna see a serious decline, just like in office spaces where we've seen, people just don't wanna work in offices no more, and I get that. So yeah, let me know your 2 cents and what you think about this whole thing, and I'll see you in the next one.